Nifty can crash to 12,000. That's what a lot of people have been saying of late, especially given the weakness in the US markets. But I am seeing completely different data in the market breadth that I use. So today we're going to focus on the market breadth, the current market conditions, and also we're going to look at a very good sector, a couple of stocks from the chemical space. Hello and welcome to the 10 Invest channel. So let's discuss the market conditions and also the stocks today. So let's get started. So the current market conditions are kind of dicey, I'd say. Nifty overall has broken down from a very important support zone, right? So 19,300 was a very important support zone that I have been calling for, and I expected market to reverse, but we had a small bounce and we have closed below that zone. So overall, Nifty already had a trendline breakdown, retested, and now we have broken the support zone. So Nifty definitely looks worrying, right? So we have broken important support zone, and overall large cap stocks have corrected a bit. So what I did is I first checked the Nifty stocks itself. So if Nifty is correcting, obviously the stocks in the index would be weak. So I checked the Nifty index market breadth, and 14 out of 50 stocks only are bullish. So remaining 36 stocks are bearish, and this is the weekly CCI indicator. So here I'm basically checking how many stocks in the entire Nifty index has CCI on the weekly above 100. Basically, CCI on the weekly is bullish or not. So fully 14 stocks have been bullish. So this number was about 35, and we have dropped every single week. So overall, definitely there is a very strong bearishness in the Nifty 50 stocks. But if you move on to the future and FnO futures and option stocks, here also if you see, we have fallen down every week, right? So we have been going down from almost 110 stocks to almost right now below 80 stocks. So also the futures and option stocks where you can trade futures and options are also looking bad. So for me, this is not a good sign. But then when I check the overall market breadth, which includes also the cash stocks, I have a completely different picture. Here, if you see, previous week, we had 919 stocks bullish, and this week we have 973 stocks bullish. Now remember, the small cap index itself closed positive for the week, and we were up 1.23% in the small cap index. So overall, though Nifty stocks and futures and option stocks are looking bad, the rest of the market is still looking bullish, right? So that's the takeaway from today's video, that markets are correcting, yes, but the cash stocks are outperforming the markets, and the cash stocks are still doing well. There is still a lot of stocks in the markets doing very well. We are still holding around those highs, whereas FnO stocks have dropped and Nifty stocks also have dropped. So that's definitely a bullish sign still for me. Now this data can change next week or the week after, but overall I think the small cap stocks should continue to do well, and the mid cap stocks also should continue to do well. So that's my current assessment. And I think if we kind of reverse in Nifty also starting next week or a couple of weeks from now, I think we should probably head higher. Now on the small cap index, if this number drops significantly any week, let's say next week this number drops significantly, then that's definitely a sign of bearishness. Okay. Also, your portfolio is a very good sign of the overall market health. So if your portfolio goes down, definitely the market is not doing well, right? So that's overall short summary on the overall market breadth. So let's move on to the stock video for today. We have two chemical stocks and two other stocks from different sectors. So before that, a disclaimer: this is purely an educational video, and the stocks I recommend here are purely for educational purposes. So let's get started. So today I'm going to focus on large bases. So by large bases, I mean stocks which have been correcting for last more than 1 year or so, and stocks which are probably trying to break out, and I'm trying to find an early entry for a swing trade here. So let's move on. The first stock for today is KNR Constructions. Now KNR Constructions is in the space where they lay roads and all of that. So it's kind of a mid-cap company, 7,500 crores market cap. ROC is very good, 21.4%. ROE is 15.7%. So if you're new to my channel, this video was one of my first videos that I did. It's actually the first video that I did long back, and it's done quite well until now. And today we are looking at the stock again. So PE is 16.7. The sales growth and the profit growth has been very good, 18% and 15%. I'll tell you why I am focusing on these numbers shortly, but these numbers look phenomenal, right? Also, if you look at the overall sales, we have done really well in the last 2 years. So we've gone from 3,000 crores to almost 4,000 crores in sales, while the operating margins have been very stable. And also here, the operating net profits or the PAT has gone up significantly. So overall, it's a very strong company, fundamentally very good. Sales growth, profit growth, it ticks each and everything from a fundamental perspective. If you move on to the technicals, the reason I'm focusing on the stock today is, even though the stock has done so well, the stock broke out from the COVID base here. We had a very strong large base breakout somewhere in October, November 2021, and we went from 140 levels to 300 levels. So we just kind of doubled, and then we have been consolidating for a very long time, right? So since August 2021, we have been consolidating. That's almost a 2-year long consolidation. Now, by a large base breakout, this is what I mean. When a stock consolidates for a long time, that's what you call a large base. So anything more than 6 months consolidation for me is a large base, and the greater it is, the better it is. So in this case, it's a beautiful large base, and I'm seeing this as a normal correction in an uptrend, and we have not broken that previous weekly swing low yet. So we have broken the swing low, but I think this is a swing low for me that really matters. And now we are about to break out from this zone. Now, the most important point for this talk today is the surge in volumes. The volumes have come again after a very long time. So we saw one of the highest volumes here, and after that we are seeing some high volumes here as well on this breakout. So that gives me confidence that this stock probably is ready to break out from here. Also, we had a very strong bullish candle, and we have broken out from this tight consolidation from this zone, right? So that's a beautiful breakout from there. And now once we break out from this confluence of resistance, by confluence of resistance I mean the horizontal resistance and the trend line resistance. Once we break from that resistance, then we are heading higher. So this is a very good pick from the current market price, from the current market levels. So it's around 266 rupees. You can keep a small stop loss of 240, which is 9.7%. And we are looking for a 50% return, which is around 400 rupees from the current levels. So this could be a swing trade. So you can also go with the 10% position size if you want. And if it's a positional trade, you can go with 5% to begin with, and then you add on more as and when the stock hits higher. So that's the first stock for today. The second stock is from the chemical space, Tirumalai Chemicals. Now, a lot of stocks from the chemical space have been doing well. Of late, at least the last couple of weeks, I've seen a strong traction in many stocks. Stocks like Jubilant Ingrevia, which is a very hot stock in the market, has been doing quite well as well. So you can also buy that stock, but that's quite extended for me, and that's why I'm looking at stocks which are yet to break out. So Tirumalai Chemicals is the first stock from the chemical space, a small cap company, around 2,200 crores market cap, PE is 56. I would not say it's very overvalued, but looking at the PE numbers, you might think it's overvalued. Yes, ROC is 10.9, ROE is 7.88. The sales growth is 25% last 3 years. Also, the profit growth is 59%. So overall, for me, these are very good numbers, and I think the stock fundamentally is a decent company as well. So we have done very well in the last couple of years. The sales has grown almost by 100% in the last 2 years. The operating margins were good, and then it dropped significantly down to 9%. Now that was one of the reasons why the PE has gone up, because the earnings have reduced drastically while the stock was just consolidating, and that's the reason why the PE has gone up. But overall, I think these fluctuations are quite normal here in this company, and I think if we start performing well again, the market price, the share price will also head higher. So that's from a fundamental perspective. So moving on to the technicals, again here it's a beautiful breakout we had in 2020 after the COVID crash. Very nice consolidation here. This is a very good point to buy. Whenever you see such breakouts after like 10, 20 weeks of consolidation, that's a good points to buy, right? And then we just been going sideways. Now we haven't broken this previous swing low on the weekly charts, and we have just been going sideways, and we kind of have an inverted head and shoulders here, and we're kind of breaking out here. Again, the point to note here is we have already crossed this significant level, so we might see some consolidation here, but this breakout is already confirmed from a weekly closing basis. Also, the volumes have been very good, and we are probably heading higher from the current levels. So if you also see this point, we've also had a breakout, trendline breakout here. Now there could be a resistance around that zone, around 270 levels, but I think we should easily take out that. So entry at 222, stop loss of 10%, which is 198 levels. We're looking for targets of around 50%, which is 330 levels, which is nothing but the previous all-time high. So again, a very good swing trade also can be done here. You can also do for investing if you want. This is just a first base after the massive run up. So I think we are headed much higher from the current levels. So that's the second stock for today. And if you like my analysis until now, don't forget to subscribe to my channel, and don't forget to like this video as well. Now, in case you have been watching my videos for quite some time, do me a favor and share this video with your friends and help the channel grow. Let's move on to the third stock for today is DCW, again from the chemical space. Again, a very small company, 1535 crores. PE is very low, 13.1, unlike Tirumalai Chemicals. ROC is 24.5. ROE is 17.5. So pretty good numbers. Also the sales and PAT growth have been very good as well, right? So again here, last 2 years, the sales has been phenomenal. Here the sales, the operating margins have been very good, right? So we have risen to almost from 11-12%, we have risen to 16%. Now these are the stocks that you want to hold in your portfolio, right? Especially if you're considering for 3 to 5 years perspective, these companies can do very well because they are looking at improving the operating margins continuously, right? Also here, if you look at the PAT has done very well. We have gone from almost posting losses to almost 192 crores. So overall, for me, an excellent company. So moving on to the technicals here, again, we had a massive rally up, and then we have been consolidating for last 2 years or so. Right now, look at this volumes again here. The volumes have been very good. So if you look at all my stocks, I'm recommending they are just breaking out from a tight consolidation, and the volume has been good. Now these are what I call low risk setups or low risk high reward setups, right? If they break out from this zone, then we are looking for much higher targets. Now that's one of my key strengths. I try to find such stocks which are just breaking out, so that you don't waste your money in stocks which are not moving. You try to enter stocks which are just breaking out. You might enter in good profits, right? So entry at 52, stop loss of just 7.7%. It's a little aggressive. You want to keep it a little down. You are free to do it, but I think 7.7 should be fine. Looking at targets of 70 rupees here, which is around 35% from current levels. So that's the third stock. The final stock for today is HFCL from the telecommunication space, right? So they manufacture cables and all of this. So here again, it's a kind of a mid cap, 9,800 crores. P is 31, ROC is 15.7, ROE is 10.2, and a pretty good sales growth and profit growth. But again, here for me, the important things is the sales. We have almost gone back to 2019 sales highs, almost 4,700 crores, and we might do well going forward as well, right? So operating margins have been very good, increasing operating profits as well, and overall the PAT also has been doing pretty good, right? So moving on to technicals, again the stock has been doing a massive consolidation. Now this is also a very tight consolidation here. You can see a kind of a cup and handle here, and volumes have been very good. So this is a major support zone. So in case, let's say tomorrow the market kind of cracks, and if it comes around levels of 50 odd levels, then it's definitely a good time to buy this stock. Okay, but for me, I think we are headed towards this zone here, which is a major resistance. And if we break out from the zone, then we are entering a long-term uptrend. So this is again an early entry, like I discussed. I love early entries. They are very good setups because it's not very popular on social media, and also TV channels might not really discuss because it's not moving, right? So it's a very good entry right now at 71.5 levels. Stop loss of just 7.7%, which is 66, which is around that lows over there. We had a gap here which was filled this week, and we kind of reversed. We're looking for targets of 95, which is this zone, right? Which is the highest point of this 2021 highs, and which is 33%. And if we break above that zone, then we are heading even much higher, right? So that's the last stock today. I hope you've enjoyed this video. Short stock summary. These are the 4 stocks. Again, 2 small cap from the chemical space, and then from the construction space, and then from the cable space. So all stocks are decent, not very bad. Pretty good numbers in terms of sales and PAT. Also, the stop loss is not very much. You can take a trade. You can also convert into a positional trade or even investment trade. So these are the 4 stocks. I hope you enjoyed my analysis, and if you did, don't forget to subscribe to my channel. So otherwise, I'm going to leave you here. Take care, stay safe, and trade safe. Until I see you in another video. Bye-bye.